wanted to make a quick video in reply to some of the stuff that's on the Realvision Exchange. I've been posting a couple of bits on interest rates recently and talking about the German 10-year and the US 10-year breaking out. And then there's been a few questions recently regarding the short the short end of the curve. And then there was a post by Jeff Schneider talking about the TGA and short end of the curve. So I'm not saying that I'm going to answer why that's happening, but at least at the end of the video it might point to a reason why something might be happening. Yeah, let's leave it at that. So I don't do technical analysis. I don't do the drawy line thing. It's just been really interesting to watch recently, especially in light of everything. Like obviously, Raul's made videos recently saying about, he thinks interest rates are going to zero, and that might well be the fact over time. But it's just really strange. He often talks about technical analysis, but nothing about this chart screams that the US 10-year is going, that rates are going to zero. It's all constantly making higher highs and higher lows. This is the US 10-year yield. So this is the yield on the bond. It's not the bond itself, okay? So for this, yields are going higher and moving higher. It keeps going up, making a higher low, higher high, say here, coming back, retesting and going up again, and it keeps going up. This would be a chart that you would be buying if it was whatever. If this was GameStop, you'd be buying this. It's going up. Interest rates are going up. And if you look at the others, for me, obviously, I look in pounds. I look at gilt yields. It hasn't started as early as the US. Obviously, it's not really started. It's made this most recent low in January, but now it's moving up. The same in Germany. Okay, it made its low, you could either say December or November, most recent, and it's started to move up, and it's moving through these levels. Australia is moving up. The odd one out, I think, might be China. And again, this is just a quick video. Their lows was in April. In April. And it's continued moving up all the way through July, lower, then higher through October, peaked in the 19th of November, which is really strange because the 9th of November is when commodities, although they had been moving up all the way through June and July of last year, commodities really took off on the 9th of November. So I don't know if that's got anything to do with, but most recently, 19th of November was the peak, 3.35, around there. And it's recently seen a lower high at 3.28. If you're at all a follower of Hedgeye, their big call in Q4 of 2018 was growth slowing in the US. So if you remember, you had the big sell-off through Christmas, but previous to that, China peaked in Q4 of 2017. Okay, then you had Europe peaking in Q1 of 2018, and then the US followed in Q4. Obviously, going into this period, China was obviously hit first. Their rates peaked October through November, December. They were already in the coronavirus because it started, conspiracy theories, whatever, okay, but they were slowing first because they were hit first by the virus, okay? So, because they were the first in and first out, are we starting to see again the first bit of slowing? First in, first out, so now are they first in again to this slowing period? Are we in the West? Are we in UK, US? Are we still in this period before we start to slow maybe I don't know, 3 to 6 months later, because we went in 3 to 6 months, well, 3 months later than China did. So anyway, I don't know. Obviously, there's a big hoo-ha about China, and Mike Green's brought up about them using dollar funding via Bitcoin and whether it's enough or whatever. There's all sorts of stuff, but it's just really interesting that the Chinese 10 years peaked at roughly the same time as when this the short end of the curve, the very short end, 3 month in the US has started to really turn down. But then again, it might just be, obviously, there was a period where Raoul was saying reflation is overdone. There could be a point where people weren't long enough of reflation. We haven't actually seen it. We haven't actually seen a big run up. And now, you know, the naughty hedge funds are doubling down, you know, buying the short end and shorting the long end of the curve, and really exaggerating the, the curve steepener. Maybe we're going to see this blow off coming through in the next couple of months before, before gravity takes hold. So it was just a quick one. Again, I don't do, these are just levels where I could see the price had sort of bounced or gone up. So don't pay any attention. It's just wiggly lines on a chart to me. It was just really interesting that, you know, everywhere else seems to be poking their head above these points, whether it's UK, Germany, Australia, obviously the US, but are all making higher highs and higher lows, whereas China appears, at least just today, what's that, 4th, yeah, possibly making a lower high in Chinese 10-year yields. I don't know, we'll see. Anyway, thanks for listening. Cheers, bye.